Thanks for joining us this morning. We appreciate you taking the time. We're going to spend about 30 to 40 minutes reviewing the IRS reporting requirements, and appreciate you being here on the webinar this morning. This is part of our FAB Well-Advised CEO platform and is part one of a mini-series with parts 2 coming on the Cadillac Tax, and the third and the final part of our mini-series is regarding the small market expansion to 100 employees and below. So again, thanks for being here this morning. All right, so let's kick this off with the IRS reporting requirements. So this morning we're going to be going through the forms 1094 and 1095C, making sure everybody knows what they are, what they mean, and what the purpose is of these forms. Also, we want to make sure we understand what data must be collected, and we want to figure out and talk about how you as employers can be best prepared to submit these reports and make sure they're accurate. So the final forms, they were actually released. There were slight updates in the forms themselves. They were released on February 4th of 2015. And essentially what these IRS reporting forms have done is they've created a couple new codes in the Internal Revenue Code, Section 5055 and 6056 to be specific. What these codes do is they support the enforcement of the individual and the employer mandates. So in 2015, beginning in January 1st, you will be required to collect data that you've never had to collect before. For many of you, especially employers who have less than 100 employees on the benefits plan, you've never had to report anything in regards to your health care program to the Department of Labor, the IRS, or anybody else for that matter. These are new rules. So on Form 6, or on Internal Revenue Code Section 6055, this essentially is there as a verification that minimal essential coverage is in place for individuals. This will help support the individual mandate and identify employees or individuals who are in compliance with the individual mandate. This is mostly an insurance carrier requirement, and information for 6055 has to be reported on Forms 1094B and 1095B. So the B forms are not anything that you would have to be concerned about, especially if you're a fully insured employer. Section 6056, this is the verification of compliance with the employer mandate. In addition to reviewing the employer's plan that's offered to employees, it's also there to determine if any of the employees that you currently have that are full-time are going to qualify for those premium tax credits. Now that only comes into play when an employee elects to purchase their coverage through healthcare.gov on the exchange. The appropriate forms for fully insured employers and self-insured employers are the forms 1094C and 1095C. So essentially, who is required to report? Not everybody. But if you are an applicable large employer, that means that you are subject to be in compliance with the employer mandate, then you will be required to submit the appropriate IRS reporting forms on the health plan that you offer. So an applicable large employer is determined if you are an employer who has averaged 50 or more full-time equivalent employees in the prior calendar year. A lot of different things can determine if you're an applicable large employer. Maybe one of the most confusing is the aggregated ALE groups, specifically made up of common ownership or subsidiary companies or affiliated service groups. These organizations need to have on their file or in their file a notice from a benefits or a tax attorney if they qualify under some of these rules and regulations. The owner of the company should be pretty familiar with the common ownership rules or the subsidiary company rules and regulations. So this is something that should be handled internally. And if you have not yet checked this out, we would recommend that this is a priority for you to determine if you do qualify as an applicable large employer. The easy one is your full-time employees. How many full-time employees do you have? If it's greater than 50, then yes, you're going to be qualified as a large employer. You also have to include your part-time people. This is where the full-time equivalent calculation comes into play, and that's a combination of all your part-time hours and your full-time people to determine if you are an applicable large employer or not. For some employers on the call today, you have variable hour employees, and for those employees, you have installed a look-back measurement period that's made up of a measurement period, an administration period, and a stability period. This is going to be one of the more complex parts on determining an applicable large employer status because these folks do have variable hours. But the goal of those measurement periods are to identify those folks who should be qualified and classified as a full-time employee. So it is important that your measurement periods are set up and accurate, and you're capturing the appropriate hours worked that you need to be. Once you've made the determination that you are an applicable large employer, what forms will you need to report on? Well, just a few slides ago, we identified a couple of those forms. And if you are an applicable large employer, you're going to know that Form 1094C and 1095C are going to be the forms that you are mostly going to be required to submit. We haven't run across many, but there are some out there, smaller employers who have less than 50 full-time equivalent employees who do have self-insured coverage. For those employers, they are responsible to file 1094B and 1095B as well. But for the majority of everybody on the call today, that would not apply. If you don't report, or if you don't offer health care coverage, you are still required to report on Form 1094C. Again, the goal of these forms is to identify if you have completed and are in compliance with the employer mandate. So let's take a couple minutes and go through a couple of these slides. This first form is 1094C. Essentially what this is going to be the cover page of everything else that is submitted to the IRS. Part 1 is pretty straightforward. This is going to be the employer information. Part 2 is where it gets a little bit more tricky. Under Part 2, specifically line 22, there are certain certifications of eligibility that may or may not apply. And the goal of these certifications of eligibility are to allow you to complete a simplified reporting of the 1094C and 1095C. And we'll go into that in a little more detail here. So essentially this form is designed to be the transmittal form, and it's the cover sheet that is submitted along with all of the employee 1095C forms when they're filed. It's going to identify you as the employer, any certifications that you choose to elect, and any other information as far as aggregated group or common ownership. So it's here to identify not only you as the employer, but other employers who may be linked to your organization. When we talk about line 22, this is the certification line, and there's 4 certifications that are available. One is qualifying offer, one is qualifying offer to transition relief, one is Section 4980H transition relief, and the other is the 98% offer method. We'll go into each of these in a little more detail. But again, what these allow you to do is create a simplified reporting or qualify for employer mandate transition relief. As far as the simplified reporting goes, I don't know how simplified it is. Essentially, you will have to report to your employees the same thing that is already on Form 1095C in just a different format. So Form 1095C is already produced, and it may be the easiest way to distribute information to your employees. So we'll go into that in more detail as well. So the first qualifying offer method and option here, what it says is that you as the large employer are certifying that for each month of the year that an employee was full-time, you've made an offer of affordable and minimal essential coverage that was made to all employees. This coverage must also be offered to employees, spouses, and dependents. What this allows you to do, it allows you to use code 1A on Form 1095-C. And you'll see what that form looks like in a minute if you don't know already. And again, it also allows you to provide a simplified statement to employees instead of the Form 1095-C. This is probably not one of the methods that we would expect a lot of employers to use, and we'll talk about that here in a little bit as well. As far as the qualifying offer method, transition relief, this is very similar to the previous transition, the previous reporting option. Now, what this says, it says that you must certify for 1 or more months during the year you have offered affordable and minimal essential coverage to at least 95% of your full-time employees. So maybe you haven't offered to everybody, but you've offered it to most. In that case, you're going to be able to use this qualifying offer as well. In addition to code 1A, it also allows you to use code 1L on your line 14. In addition to that, you may be able to access the simplified statement to employees. Again, not something that we expect many employers to use. The third option is Section 4980 transition relief. Now, we do expect a lot of employers to use this code. I believe this is going to be one of the more frequently used codes on line 22 on the 1094-C. So essentially what this does is this says that you as a large employer are qualifying for the employer mandate transition relief. Now, if you are an employer that has between 50 and 99 full-time equivalent employees, essentially this is going to be compliance date until the start of your 2016 plan year. So if you think about the employer mandate for large employers that have 100 or more full-time equivalent employees, 2015 was the year that you were required to be compliant with the employer mandate. For employers between 50 and 99 full-time equivalent employees, you are able to wait until the first day of your 2016 plan year if you qualify for the transition relief. If you are an employer with 100 or more full-time employees, this transition relief, Section 4980 transition relief, also allows you to qualify in being compliant with the employer mandate by offering coverage to only 70% of your full-time employees. Now, the law says that you must offer coverage to 95% of your full-time employees to be compliant with the employer mandate. This gives you another year and allows you to work up to that 95% number. So in 2015, as long as you're offering coverage to 70% of your full-time employees and you're using this transition relief, Section 4980H, then that will allow you to be compliant with the employer mandate. This is also a code that, or a transition relief that we expect to be selected for employers who are out of compliance with the employer mandate. It helps create a lesser penalty by allowing you to reduce a larger number of full-time employees. In 2015, you can subtract 80 of your full-time employees when calculating that penalty. If you are going to select this certification, you must also complete Part 3 on column E on 1094-C, and we'll see what that looks like here in another minute. But again, we do expect most employers to use this transition relief. The last certification is 98% offer method. Now, this says that you are certifying that for all months of the calendar year, affordable and minimal essential coverage was offered to at least 98% of your full-time employees and dependents. If you've done that, so you've offered more than 95%, but you haven't offered to everybody. If you have offered to 98% or more, this allows you to not complete Part 3, Column B on 1094. And we'll show you what that looks like here in a second. So here's Part 3. Essentially what this does is, if you look from left to right, we identify all 12 months as being an option and then each calendar month thereafter. Column A says, have you offered a minimal essential coverage in that specific month? If you have, then yes, you can click yes for all 12 months or each of the months that you have offered coverage. Column B is where you identify your full-time employees. How many full-time employees did you have that month? Now, there's specific ways on identifying and counting those employees. The first is that you can select either the first day of the month or the last day of the month. And you can say, how many total full-time employees do we have? As long as you're consistent with your count, you're going to be fine. That's the number that you put in here. Another option is to be, you can select the first or the last day of the payroll. So that may not coincide with the first or last day of the month. You can use the first or the last day of the payroll to identify the number of full-time employees. Now keep in mind, full-time employee means employees that are full-time, working 30 hours or more a week. It's important to know if you are an employer who has variable hour employees and those employees are in their initial measurement period, those employees are not to be counted in this column. So they would not be considered full-time employees for this count. Column C, how many total employees have you had for each and every month? And we're going to use the same counting methods as we just talked about, the first or the last day of the month or of the payroll cycle. This will allow the government to identify the number of full-time employees and also the number of part-time employees you have. So this is going to be the total employees that you have for that month. If we are an aggregated group, if we do have common ownership, we do have to check the appropriate boxes in column D. If you're an employer who is just taking control of another organization, or you've always been part of an aggregated group, you're going to select either all 12 months or only the months that you have been a part of that aggregated group. In column E, we expect most employers to complete this column as well. We will complete this column only if we select Section 4980H Transition Relief under the certifications on line 22, as we just talked about. So if you are an employer that has between 50 and 99 full-time equivalent employees, you're going to enter the letter A in each of the months that you had 50 to 99 full-time equivalent employees. So the code for 50 to 99 employers is code A. If you have 100 or more full-time equivalent employees, that's going to be where you enter code B. And again, the point of that is to offer coverage to less than 95% of your employees, still be compliant with the employer mandates, or pay a reduced penalty if you are in non-compliance. So those are the codes that go into column E. A, if you're between 50 and 99, and B, if you have more than 100. As far as Part 3 goes, column D, and this is what we just reviewed here. Column D is the aggregated group indicator, and we'll show you where that applies under Part 4 on 1094C. And column E is the 50 to 99 or 100 plus transition relief. So if you are an aggregated large employer and part of that aggregated group, Part 4 is where you will be identifying the other employers who are part of that group. You'll need to list the name and the EINs of each of those employers so that the IRS and the DOL can track to make sure that those employers are also complying with the employer mandate. It's important to review with tax, benefit, and legal counsel if you are an aggregated large group employer. This is how they will track that piece. So as we move on to Form 1095-C, this is the form that is going to collect information on the coverage that you provide to your employees, which months they've had coverage, and what type of enrollment was offered to them. If you are a self-insured employer, you will also have to report on the individuals who are covered under the plan. For example, the employee, the spouse, and all dependents that information must be captured and reported on this 1095-C. Now, this is a form that goes to the IRS and also to your employee for tax purposes. So let's take a look at that form. So in 1095-C, you're going to see in the top left-hand side, Part 1. This is where the employee information is going to be listed. Keep in mind, these 1095-Cs are to be completed and distributed to every single one of your full-time employees. If you have an employee who is promoted to full-time midway through the year, then this form is going to be completed and submitted to that employee as well. If you have an employee who's worked for your full-time for only 1 month, again, this is a form that would need to be submitted and completed for that employee. So each and every one of your full-time employees must have a Form 1095-C completed on their behalf. On the right-hand side of Part 1, you're going to see that this is where you're going to identify yourself as the employer for that employee. Part 2 is where you're going to identify, on line 14, what types of coverage was offered. Line 15 is how much that coverage cost for employee-only coverage. And number 16, what safe harbors, if any, are applicable for that employee. And we'll go through each of these in much more detail. At the very bottom of the screen, on Part 3, if you are self-insured, this is the piece that must also be included. So the employees listed up above, if you are self-insured, any dependents or spouses who are also covered under the plan, you have to identify them under Part 3. You will need the name of the employee, their Social Security number or date of birth, and which months that they had coverage which met the minimal essential coverage. So if you are self-insured, it is important to understand that you must be collecting specific data on dependents and family members of people on your plan. So I'm going to go through line 14 and some applicable codes that apply for line 14. These codes are the 1 codes, 1A through 1I. We're going to spend a couple minutes on just a handful of these codes because there are some codes that we will be mostly using and other codes that we mostly will not. Code 1A says qualifying offer. Now, a qualifying offer of coverage, what that means is that you have offered affordable and minimal essential coverage to the employee, and you also allowed spouse or dependents to have access to that coverage. I believe most employers on the call today, the coverage is going to qualify as a qualifying offer. So 1A is going to be listed on line 14 for each of the months that employee was offered coverage. If they are offered coverage for all 12 months, you would only have to put 1A under the all 12 months column. 1B, 1C, and 1D said that, hey, we've offered minimal essential coverage. It may only have been offered to the employee. It may only have been offered to employee independents, or it may only have been offered to employee and spouses. Depending on the makeup and the design of your plan, these may be applicable. 1E says you've offered minimal essential coverage to employees, spouses, and dependents, but this might not be affordable coverage. So if coverage is not affordable, 1E may be the code that you are going to be selecting for line 14 for that specific employee. 1F says that, hey, coverage doesn't meet the minimum value offered to employees, spouses, or dependents, but it is minimal essential coverage. This may come into play if you are an employer has choose to elect an MEC, a MEC plan, that essentially covers some of the requirements of the employer mandate, but not all. If you are in a quote-unquote skinny plan or a minimal essential coverage plan, 1F may be the code you use for line 14 on 1095C. If you have any employee who is not full-time, but that employee was enrolled in self-insured coverage, 1G is the code for that, and 1H is going to be probably the other most common code used here, and this says no offer of coverage was made. Now this is going to come into play where you have a part-time employee who was not eligible for coverage for specific months during the year, then maybe was promoted to full-time. So those months that person was not working for you or was part-time, there would be no offer of coverage made. So this is, again, one of the codes that we will expect to see filling up 1094 or 1095Cs on line 14. 1I is the qualified offer transition relief. This is if the employee, spouse, and dependent received no offer of coverage, or they did receive an offer that is not qualified. If you are using the qualifying offer method, transition relief, it was one of the certifications on Form 1094C, then this is going to be the code that we will use. Again, we do not expect many to be using this code, many of you who are on the call today. As far as line 15 goes, this is where you would enter the cost of employee-only coverage. The only time you must complete this line is if you are offering coverage that is not a qualifying offer. So as you're completing line 14, if you use any of the following codes, 1B, 1C, 1D, or 1E, then you must submit and identify what the cost was for employee-only coverage for the plan that you are offering. If you're offering qualified coverage, you can leave line 15 blank. Line 16 is another line where they have codes that are two codes, 2A, 2B, 2C, 2D, 2E. These codes will indicate any safe harbor codes that are used and identify employer relief if it's applicable. And we'll go through those right now. So 2A, this is going to be one of the more common codes again. This is going to say that employee was not employed with us during the month. So if an employee is hired in April, January, February, and March on his or her 1095C, you would list 2A in those months. If an employee is not a full-time employee and did not enroll in MEC, 2B is going to be the code for that person. 2C is going to be another common code. That employee was enrolled at MEC. So if you are offering coverage and that person has elected coverage, 2C is going to be the code that is used for those employees who are enrolled in your plan. 2D, this is going to be an interesting code, and it will only apply to those employers who have variable hour employees. We're going to select 2D if an employee is in their initial measurement period. So for a specific number of months, we don't know if they're full-time or part-time, but we're measuring their hours. If that employee turns to be full-time in, say, July, from January through June, you would identify that employee as 2D on line 16. If that employee elected coverage in July, you would list that employee as 2C from July on. 2E is a more interim relief code as well. If you are a multi-employer and you're utilizing union employees from the union hall, this is going to be the code that you will select for those employees who are full-time for you. Now this assumes that you are paying into the benefit fund on a monthly basis and that the benefits that are offered to those unions meet the minimal essential coverage, the minimal value, and are affordable. Now we have not run across a union plan that does not meet those three thresholds, but it is always wise to check with the union hall to ensure that the plans that are being offered meet the criteria. So as long as you have a union employee who's working full-time for you, line 16, you would enter 2E for that employee for the months that they work for you full-time. And if an employee works for you only one day in the month, and that's a full-time employee, that you still need to complete the appropriate codes for that employee for that month. 2F, 2G, and 2H, they will identify different safe harbors depending on the affordability test. If you've used the W-2 safe harbor, the federal poverty level safe harbor, or the rate of pay safe harbor, this is where you will identify those codes for those specific employees. If you have an employee who is qualifying as a non-calendar year transition relief, 2I is going to be the code that that employee is going to see on their 1095-C line 16. So now that we've talked about what you have to put on 1094-C and 1095-C, it's important to understand when you must submit these forms. They must be filed to the IRS if you're filing by paper by no later than February 28th of 2016. So again, this is data that we're capturing on a monthly basis that is submitted once a year on behalf of that employee and on you as the employer. If you decide to file electronically, and if you submit more than 250 1095-Cs, it's required that you file electronically. You do have some more time, and you can submit those forms to the IRS by March 31st of 2016. It is very important to know that these forms have must also be submitted to your employees who are full-time no later than February 1st of 2016. So these must be completed and ready to be distributed to your employees by the end of January, essentially, of 2016. So what can you do to prepare best? Well, number one, confirm the ALE status. Check with your tax, your legal, and your attorney partners, and the ownership of the organization to make sure you are or are not part of an ALE or a common ownership group. Identify the payroll and the HRS reporting capabilities. A lot of these reporting requirements are being supported by payroll and also your HRIS system. So make sure that you understand what the capabilities are, and if there are none, figure out a way to get some capabilities introduced and in place pretty quick. Find out which transition relief opportunities you applied for or you qualify for. Some of the work we have done in our baseline assessment identifies some of the transition relief that employers have access to. So please refer to that if you have access to that. And lastly, this is going to be some information that employees have not received in the past. So what's the communication strategy and how are you going to distribute this to your employees in January of 2016? So before we get to a couple frequently asked questions, we want to make sure that you're aware of a couple BAB university events that are upcoming. And Kaylee Kirsch, who is our Director of Marketing here, is going to talk to you a little bit about those programs. Kaylee?
Hello, everyone. First up, we have our Scared or Prepared Cybersecurity event. This event is going to take place on Tuesday, April 28th. It is a little bit of a different time for us. It's going to be an evening seminar from 2 to 4 p.m., and it will also be held at Advantacom's headquarters, also in the north side of Pittsburgh, but you will not be coming to Babing's beautiful ballroom. The event will also feature a happy hour afterwards on the rooftop deck at Advancicom. Space is limited for this event, so be sure to register if you're interested in attending. Now, this webinar is part of a 3-part mini-series webinar, and the next upcoming webinar will be held Tuesday, May 5th from 9:30 a.m. to 10:15 a.m. And this webinar is going to be on understanding the Cadillac Tax. We'll be going over what the Cadillac Tax is, who's impacted by it, and what employers can do to help avoid the tax. If you're interested, be sure to sign up for that. Space will also be limited for these webinars. And then the final webinar for our mini-series will be Small Market Expansion, Employers 2 to 99. This will happen May 19th, also Tuesday, from 9:30 a.m. to 10:15 a.m. And we'll be covering new carrier rating methodology. We'll show case studies and the impact of these changes, and we'll also be offering up some strategies to avoid or delay these market reforms.
Kaylee, thank you. A lot of stuff coming up, and we hope that this information is beneficial for you as far as being compliant and running your business. So we had a couple questions come through, and we'll get those answered and get those out to everybody. But we also wanted to identify some questions that we've been receiving maybe more frequently than others. And one of the questions is, hey, well, what exactly is an aggregated ALE group? What does that mean? Well, what this does is this refers to a group of employers who are treated as a single employer under the employer mandate rules. Specifically, the Internal Revenue Code, Section 414, identifies the criteria and the requirements for these single employer treatments. So again, refer to your benefits, your tax, and your legal partners, and please talk with ownership to determine if you qualify under Code 414 as an aggregated applicable large employer group. Another question is, do the self-insurance requirements, reporting requirements, apply to those employers that participate in a partially self-funded plan? The easy answer is yes. The reinsurers, they are not going to be subject or need to report anything on your behalf. It is absolutely going to be the employer's responsibility to fully report information about the plan on 1094 and 1095-C. Another question, what about a co-employment situation such as staffing firms? Who's responsible for filing and any tax penalties for non-compliance? Well, this is something that you would want to go back and review your agreement with that staffing firm or that organization to figure out who is defined as the employer for federal tax purposes. In some instances, the contract may not spell that out, and one of the easiest ways to determine this is find out who is responsible for paying the FICA tax. That typically will link that employer as the large employer for that employee. So please refer to your contracts, and if there's nothing in your contracts, please review and understand who's paying that FICA tax. So here's a good question. We're fully insured and we provide coverage to non-union employees and also contribute to a MIWA for the union employees. We don't sponsor the MIWA, so who reports the forms to those union employees? Great question. Now this is where we're going to see some of the multi-employer transition relief being identified on line 16 of Form 1095-C. Each employer that participates in the MIWA is responsible for filing for their employees that are full-time during that month. If you are a union employee and you are working for 7 or 8 different employers as a full-time employee during the year, it's very likely that you're going to receive 7 or 8 1095-Cs from those employers. So if you are contributing to a MIWA plan, then yes, you will have to file Form 1095-C on behalf of those employees who are in that plan. Great question. Does an employer have to send 1095-C to a terminated employee or any COBRA participants? So if that employee, if that individual, if they were full-time at any point during the year, then yes, you must provide them with Form 1095-C. The early part of that year will say that they were a full-time employee enrolled in coverage. And for the latter part of the year, it would say that it was no longer, that employee was no longer employed with a specific code. If you are self-funded, you must also provide Form 1095-C to your COBRA participants, even if they weren't employed by you during that year. So if somebody's been on COBRA for 14 or 15 months, it's very likely that they may not have been a full-time employee for the last 12 calendar months of the year. In those instances, when you are self-funded, you must report Form 1095-C to those employees. Last but not least, what happens if we don't comply? What happens? Could it lead to a Department of Labor or an ERISA audit? Well, there are going to be specific dollar penalties for late filings or failure to file, but probably worse than that is going to be the potential for the DOL and the ERISA audit. Employee complaints are the main reason for Department of Labor and ERISA audits. Other than that, by filing information incorrectly or not filing at all, you're essentially raising a red flag up above your business, saying, hey, we're not doing something right. And essentially that's going to be easy pickings for the IRS. So we do want to encourage everybody to fully understand your requirements to avoid any Department of Labor or ERISA audits. So we can get through this first round of IRS form submitting and get that information to the IRS so that they're comfortable and know that you are complying with the employer mandate and that your team are also complying with the individual mandate as well. So that was the last of the questions here. I wanted to thank you and everybody else for sticking with us on this IRS reporting webinar. And there's a couple more great ones coming up, specifically, as Kaylee said, the Cadillac Tax and also the small market expansion. The cyber program may be another great program that you would like to consider attending as well. But again, we always and very much appreciate your support. We hope to bring you information that helps you run your business and make you feel comfortable complying with some of these laws and regulations that are out there today. Until next time, thank you. Have a wonderful day, and I hope you enjoyed the event today.